Well, hello, happy Tuesday. It is so great to be back with you. I hope that you're having a great week. If you're joining me on the replay, happy replay day to you as well. But I know many of you are here live with me, and I'm excited to welcome you back to today's live level up conversation.
Welcome to Level Up with Winnie Sun. Market updates. Award-winning financial pro. Get ready. I present to you Level Up with Winnie Sun.
Well, hello. It is so great to be back here with you. And I see so many friends joining us from all different platforms: LinkedIn, Facebook, Twitter, YouTube, and everywhere else. I want to say a quick hello and welcome, of course, to Joshua joining us on YouTube Live. Always a treat to see you, my friend. And for those of you who are joining me live, don't be shy. Let me know, first off, where you're joining me from, and of course, and how your week is going. Now, for those of you who are new to the program, I'm Winnie Sun, your host, Forbes contributor, CNBC council member, and award-winning financial pro, here to keep you on top of relevant trending business news. And of course, what makes this show really special is that we are actually live. And so for the good and the bad and everything in between, we are here with you sharing these moments together. And of course, we're going to be sharing some of your feedback throughout the show here as well. Now, what we like to do is start the show off and talk about how the market closed. Well, first off, Siddiq, I see you on YouTube Live. Thank you so much for joining us here as well. Let's talk about how the market closed. The Dow closed, unfortunately, down 228 points, but that's not all. The Nasdaq closed down 220 points as well, and the S&P 500 also down 45. Now, these are numbers we don't like to hear. I know you were thinking that maybe things were going to get a little bit better, but unfortunately, I suspect this week is going to be pretty rocky. And you may have heard, and if you haven't, then maybe I'm going to be the first to share this with you. But this is a week of the big Fed meeting. So we're going to find out what July's increase in interest rates is going to look like. Now, Treasury Secretary Janet Yellen shared over the weekend that the U.S. economy is, in fact, if you didn't know already, is slowing, but also she pointed out that there's still some silver linings, and that comes in the form of healthy hiring, that proof that perhaps we are not quite yet in a recession. Kind of like recession talk. Are we there? Are we not there? Are we sort of hot? Are we sort of cold? Are we right in the middle? Well, we're on recession watch almost every single day right now. Now, this is going to kick off the final week of July. This is a final trading week of July, and perhaps it might even actually be the most important week of the summer for depending on who you ask. Because not only do we have the Fed meeting, which I talked to you about, but the GDP data is coming out, right? Data and earnings. And get this, S&P 500, well, about a third of those companies are always, almost done in terms of reporting earnings as well. So I have more to talk to you about that because you're going to want to pay attention to this to really figure out how best to manage your own finances. But here's the thing. More and more people keep talking about a recession. It's like recession this, recession that. Are we in a recession? Are we not in a recession? And so you might feel like we're already in a recession. I thought we were already in a recession, but are we really in a recession? I almost feel like that could be a song, right? Are we really in a recession? But I can't sing, so I'm not going to ruin that effect for you. But here's the thing is tomorrow, right? The Fed's meeting is going to take place, and what can we expect? Well, you saw the stock market drop pretty dramatically today, but is it going to be the same as it happened in May and June? Are we going to continue to see more volatility, more red, as Sadiq is saying here from YouTube? Well, here's the thing. Following the May 4th Fed decision, you might remember, the Fed actually had increased rates by 50 basis points or 0.5%. And well, the S&P 500 in that case fell more than 8% the very next week. Eek. Then in June, on the June 14th meeting, the S&P 500 dropped 6% in just a few trading days as the Fed, did surprise us with a 0.75% increase or 75 basis point rate hike. So first time was a 50 basis point rate hike, fell more than 8%. The second time was even larger at 0.75%, and the market dropped 6%. So the question is, what's going to happen tomorrow? Will we learn that the Fed is going to continue and give us a 3/4% rate hike, which is what we all expect? Or do you think this almost needs some horror music, right, Curtis? I mean, or are we, or could this happen? Could we have a literally complete surprise and have a 1% rate hike on interest rates? Now, if that happens, that could be a big shocker. I mean, it's almost like watching a scary movie in the last, and you're thinking things are going to get better, and then the star of the show dies. That's almost kind of like what it would be. But I don't know what that would look like. I'm hoping that's not the case, but I don't know because I'm not part of this Fed decision. If I was, I wouldn't be able to tell you either, right? But what really matters is because the S&P 500 has recently rallied to a 6-week high because they were thinking that we're actually, the market investors are thinking that with respect to inflation, that we could actually we could be very close to the peak. In fact, hoping that inflation doesn't go any higher. So we've had some good days in the financial markets lately, but we all know that when recessions happen, there a lot of factors could need to happen in order for a recession to occur. So I want to kind of circle back and share that with you, because I know many of you have read that in order to be in a recession, that means we need to have 2 consecutive quarters of negative growth on the GDP. But actually, it goes way beyond that, believe it or not. Because if it was just like that, then we could just say, okay, everyone, we're in a recession now. But the National Bureau of Economic Research, they define a recession a little bit more vaguely, let's just say. Now, you think 2 consecutive negative GDP quarters, boom, recession. Not necessarily the case. In fact, they're saying there's a lot of other multiple factors that come in the determination of whether we're in a recession. For example, how many jobs are being created. And since right now we're actually having we're actually having really healthy new job growth. In fact, over 400,000 jobs a month being created right now. That's really important to factor into whether or not we're in a true recession. So that's kind of what we're listening for. Now they're saying that every period since 1948, when there was 2 consecutive negative quarters, this has coincided with a recession. But they're saying that this time that actually may not be the case, because in the payroll area, non-farm payrolls have grown an average of 450,000 plus jobs a month over the first 6 months of 2022. Now this is hardly what you would consider an economic downturn, and therefore, are we really in a recession? That's what you're going to probably hear some more talk about this week as well. So I want to make sure to put that on your radar. So the next time someone says, well, we're all in a recession, you can say, what, actually, technically, we're not. And this is why. Don't you feel smarter already? I know. It's financial news is actually very geeky and very good news to know. Now, there, of course, are some downsides as well. We do know that when it comes to consumer spending, that although people are still spending, because costs are so high, we're at a 40-year high in terms of inflation. We also know that consumers and their spending has shifted some. So we're seeing a lot of people definitely consume and purchase and shop more conservatively than they did a few years ago. Also, the US trade deficit hits a record high in March, which is another negative for here the GDP. Inventories continue to have supply chain issues. You're probably hearing more talk about how in the US we need to build more semiconductors. You're going to hear more about that too, because there was semiconductor issues. And for anybody who's here with me, you're probably using something with a semiconductor or two. And therefore, we all recognize the need to have these things so we can keep supply chain issues healthy, and so we can continue to function as a healthy, growing economy. So those are things that you're seeing more talk about. And of course, you're seeing sky-high prices, you're seeing widespread product shortages, all these things to kind of, lead to a recession. Even companies like Walmart are making warnings that profits are shrinking, consumer habits are changing, and I don't know, that we're like not eating out and buying, going on fancy vacations as often as we used to either. Now, you might think, well, that's you and I mean, but the rich are still really rich, right? Well, interesting enough, let's talk about that. In fact, today there was quite a bit of earnings that came out, and two major ones that I want to share with you. Actually, I think three. One of them being Microsoft. Well, Microsoft definitely missed their earnings revenues. Income fell short, kind of blah. Also, Google missed their earnings and revenue. I guess they're technically called Alphabet. Google, not doing so well this last quarter as well. In fact, their earnings were short about 7 cents a share, which is never a good thing. But here's what's interesting. So Google also shared that just like Microsoft, they're definitely struggling in terms of making enough money and earn a cloud platform. So does that mean that we're taking less pictures and storing more files? I don't know. I'm not a techie, but that's what I'm guessing. Sadiq, if you want to jump in on this, I would love to hear your take on this. And I want to see, hello, Melanie. It's great to see you also on LinkedIn Live. Such a treat to have you here. But this is something I thought you would find interesting. YouTube advertising, my friends, is also down. Now, to give you an idea of how much YouTube advertising is for the Alphabet franchise, well, they were expecting $7.52 billion of expected earnings or revenue from YouTube advertising, but it came back at 7.34 billion, which is a pretty substantial difference. Just so you know, that's almost a quarter of $1 billion less in advertising dollars, and that's important to note because typically when companies are very bullish and they feel like they're going to have good earnings and they feel like there's going to be more sales and they don't need to cut employees from their payroll, they tend to step on the gas in terms of earnings. Now expectations where advertising dollars would be higher, taking into account, of course, that we're still in pretty rough economic times here in the United States. But that number was probably already adjusted lower. And then what came in was even, I would say, pretty significantly lower from there. Not to mention what Google Cloud's expectation on cloud revenue and all their other things that they do, like traffic acquisition costs and things like that. So some of the big companies are hurting too. And it's really important for you to pay attention to because when that happens, especially going into the end of the year, you also see companies when they struggle, sometimes that also translates into company layoffs, which then also can translate into unemployment insurance, which can also then translate into less taxes being collected. And it's sort of an ongoing cycle. So really important for all of us to pay attention to. Now, another company that has reported softer or I guess more disappointing earnings is Chipotle. And I want to talk about this. Now, Chipotle has talked about how they've been having a weaker than expected sales for the second quarter. Now, you might find this interesting because in a semi-recessionary period of time, people tend to decrease their costs. So they might forego that like five-star restaurant or a really nice restaurant, right? They might forego buying that really nice car or whatnot. But typically areas that do better or improve are places like discount stores and Walmarts and the 99-cent stores, the Targets of the world, and the Chipotle restaurants of the world. Fast casual, where you're still getting a good value, right? Good meal, but at a lesser price because you have obviously it's more of a fast casual type of setting. Well, they actually found that they're actually suffering as well, and not only that, they're saying that even though some of the stores are doing better, one of the main issues they're having is higher prices in food costs, packaging, labor costs. And they already said that they might have to raise, or they actually did not might. They're actually going to be increasing prices yet again in August. So maybe if you have an inkling for Chipotle, maybe you have it this week before August rolls around. But they're saying this is what they saw. So a net income of $259 million, which is still quite a bit. So they're still making quite of earnings per share, but they said certainly because of higher food costs and ingredients such as avocados, beef, dairy, and whatnot, that price increases have to occur. So we'll see how that pans out. And I'm curious for those of you who are watching today, have you found that you have been spending less when you eat out? And have you found yourself kind of like skewing more towards fast casual and less like more sit down traditional restaurants? Because I know in my household, that's definitely the case. We're definitely doing more takeout. We're definitely doing more fast casual. I mean, having a family of five for me, that's pretty normal, but I think even more so. We're definitely not even getting, we're not doing the nicer dining as much anymore. So it's a combination of a lot of things. I think, pandemic part of it, because we're not out of the pandemic, of course, and also because of recession and just feeling like we're in a recession, right? Even though we technically aren't in a recession, we just learned that today. Now, the other area that I thought I would put on your radar, and I know Vicky, who likes to join our show often, joins us from the UK. Well, Amazon, as you know, reached it wasn't that long ago. They just spiked up the Prime membership fees here in the United States. Well, Amazon is doing more than that. They're now also going to be increasing Prime membership in many parts of Europe, increasing up to 43%. So if you're in Europe, you're looking for your Amazon Prime, you're getting that quick shipping and deliveries. Well, unfortunately, it's going to cost you quite a bit more, 43%. In fact, we're looking at London prices in the UK, prices go up quite a bit more, over 20%. We see in fact, in let's see, in France, over 40%, and in Germany, I think over 30% as well. So getting a lot more expensive. And actually, I was interested about that because I thought that the prices of like Prime, like in the United States is a very large country. We'd all agree, but we had one increase in price of Amazon price hike across the United States. But then France has a different hike than Germany, and Germany has a different hike than UK. And I thought that was interesting too, because, I would think that maybe Europe would get one price hike, but it's not. So everything's going more expensive. So what does that really mean? That means that you and I, unfortunately, we're just being parted from our money a little bit more, right? And unfortunately, we're waiting for the government to do something to get prices down lower. But in the meantime, it doesn't look like we'll have better days anytime soon in terms of your finances. So definitely keep very close eye on your budget. Continue to spend conservatively, like I know many of you have. Many of you've told me that you've downsized your budget. You're doing side hustles. You're doing everything that you can. But I think we got a little bit more ways to go before this is going to flush out. So keep in that mindset, keep the spirit. Better days hopefully are ahead, but always keep your eye on also those long-term financial goals of yours, because we want to make sure you're okay. But thank you so much, Joshua, Cossack Fighter. It's great to see you here as well. Thank you so much. Wow, so many of you joining here. I hope this information is helpful. I just really want to keep you on top of all things business finance right now, so that you can make a very educated and smart decision on how to manage your own money, right? And if there's any other questions in more detail and you're like, I have a question, I would love to hear her take on it, send me a message. I'm on every social media platform that you're currently joining me on from right now. If you're watching me on the replay, you can definitely find me there as well. Just Google Winnie Sun, super easy to find. Send me a direct message, send me an email, however you like to get a hold of me. And let me know, do you want me to answer your question on the show? Do you want to spend some time and have like a one-on-one discussion? Do you want me to come to your company and talk about financial business matters and teach and give you sort of these skills that you could really hone and use for you and your household? Because those are the things I'm doing right now. That's a big part of my volunteer work this year, and has been for the last few years, is doing more and more corporate employee speaking for all sorts of employee resource groups, DEI and DIBS, diversity and equity inclusion groups. Let me know how I can help. I would love to hear from you. With that, thank you so much, my friends, for watching, supporting our program, and please take a moment to share this show all over social with everyone that you care about. And as a reminder, you can find full episodes of Level Up with Winnie Sun on NASDAQ, the KBCW, Amazon Fire, Roku, and many other platforms. And of course, don't forget, Yes Factor is our brand new podcast. So check out, just Google Yes Factor Winnie Sun. Check it out on Apple Podcasts or anywhere that you listen to podcasts, and let me know what you think. And with that, be well. I can't wait to see you again tomorrow for In the Loop. Take care now.